We had another excellent day on the stock market today. All four indices here in the United States closing higher. In fact, we had the S&P 500 hitting a new 3-month high. The NASDAQ hit a new all-time high. In fact, we closed at a new all-time high on the NASDAQ. That was led higher by a number of names, including one mega cap stock, one of the largest companies on the planet, hitting new all-time highs itself, and that is the company I want to focus on with our trade application example here in tonight's video. So with that, let's go ahead and get started. Welcome to the Market Outlook video. I'm your host, Brandon Van Zee. It's July 12th, 2018. First of all, if you're new, we'd encourage you to click subscribe on YouTube in order to be alerted whenever we do post these videos in the future. You can also do that by signing up for our email distribution list housed within the description area of YouTube. We're also heavy users of Twitter. I'd encourage you to follow me at Brandon Van Zee is my handle. The Market Scholars handle is at market_scholars. And lastly, we do have a Facebook group that we'd invite you to join as well. You can see that web address on the logo in front of you. All right, with that, let's go ahead and do some analysis on the markets. As you can see, I do have the S&P 500 pulled up here in front of us, and we were up 0.87% today. That was a pretty nice sized day for us. What's also important around that conversation is that we closed near the highs of the day. So remember, just yesterday, everybody was freaking out, hair's on fire, and all this with the trade tariffs and all this news. Well, here we are back to new 3-month highs on the S&P 500, just like that. Quick little reversal there. In fact, yesterday, as David alluded to during his video, we had a bullish intermediate confirmation signal yesterday. And so for those of you that took advantage of that, you're probably happy with the results so far today. Again, closing near the highs. Now notice that we do have a strongly bullish posture. It's not just a regular bullish posture. We know that because the background color of this chart, which is Chart 4A, for those of you that are premium market scholars that are following along at home, it's dark green, and that tells us that we have a intermediate line that is rising and above 50. We consider that strongly bullish as opposed to the lighter green when it's below 50. So we also have a green moving average line, which tells us that price is above a rising moving average, which is also a promising sign for those of you that want to be bullish on the markets here at the current time. Of course, market sentiment, that orange line, that dotted line down below, continues to rise as well for those of you that are a little bit longer term oriented. As we look at our next charts here, this is our 4 grid. This is chart 4B for those of you that are following along at home. And you can see here the mix of success that they had in the U.S. here today. And you can see that it was actually the small caps that were up the least amount today. We actually had a good conversation about that here about an hour ago in my weekly question and answer class there. So thank you to Carl for answering that, or for asking that question. But anyway, we did notice a few flies in the ointment around the small cap universe in the last 2 or 3 days or so in comparison to some of the more robust markets out there. Now, notice that all of these markets have that dark green color shading right now, which does tell us that we have strongly bullish postures. Now, that is something that's new for the Dow Jones. Notice that just yesterday we had just a regular bullish posture, but today we converted that into a strongly bullish posture as that green line is now above that 50 and continues to rise. Now, as I mentioned before, notice down here in the lower left, we have the NASDAQ composite, and we basically closed at the highs of the day, which was also the yearly high, but on top of that was also all-time highs. So remember, this particular chart setup will flash an additional label up here at the top whenever one of these indices hits a new yearly high. And so you can see that light green label popping up there for the NASDAQ, the only one on our board. Remember, we did have a new 3-month high that we can see on this chart for the S&P 500, but we're still not a yearly high quite yet. So anyway, the NASDAQ just doesn't want to seem to give up. Technology has been a leadership sector for many, many years, and it almost looked for a while there like they were going to kind of relinquish their role, but after today, they came roaring back so much, it has you wondering if they're about ready to gear up for yet another move higher. So we'll take a look at that, as I mentioned before, in our trade application. But before we do, let's go ahead and take a look at our next chart setup. In this case, let's take a look at 3 green arrows here. And on this chart setup, which is 4C, when you see a green background color, that means we do have 3 green arrows using that system, which is basically a way to say that the price is above a rising moving average. We have a MACD, which measures momentum that is in a positive zone, and of course the stochastics, which measures how close a stock closes to its highs of a range, which is often a bullish sign, is our third measurement. And so as we look at these various indices here, all four of them actually have 3 green arrows at this point. Again, the Dow just recently got it as of today, because we got that price to close above the moving average right there. The other ones had been in a set of 3 green arrows already. And again, that's a positive sign if you're looking to trend trade the markets. That was another thing that we noticed in our question and answer class here a little bit ago, is that my trend trading class portfolio was hitting new highs, or at least close to hitting new highs. It was right within spitting distance of it. So that's a promising sign, because of course that particular class focuses on some of the highest momentum, more speculative growth oriented names, and that's generally what you want to see if you're bullish on the overall markets. Let's take a look at our next setup, which is the 1040 crossover method. This is our longer term view towards the markets. Remember, each one of these charts is 3 years in length, and each one of the candles is 1 week in length. The orange line represents the 10-period exponential moving average. The blue line represents the 40-period exponential moving average. So as you can see right here, what we're looking for is a crossover of those moving averages themselves, and our problem child has been the Dow Jones Industrial Average, but it almost looks like it wants to bail itself out. Notice that that orange line never did cross below that blue line, despite having some of that price disturbance that we've seen in recent months. And of course, with today's nice 0.91% move higher, we're closing near the highs of the week so far. Now remember, tomorrow can be a big day. It's going to kick off with a lot of bank earnings, so keep your eye on companies like Citigroup and JP Morgan, Wells Fargo, etc. But so far, so good. This has been a really strong week for the markets, despite yesterday's little hiccup when it comes down to it. So let's go ahead and take a look now at our 12 grids. And for this, I do have to kill that camera feed just as a reminder, so that way you guys can look at all square inches of the screen here in front of us. And the way that we look at this 12 grid is, if you see a green background color, that means that that particular chart is bullish according to the intermediate term line on the market forecast indicator. And if you see a red background colored chart, that means that that particular chart has a bearish posture using the same indicator. Now remember, for those of you following along at home, this is chart 4E. Now, as you look at this chart setup here, you're going to notice a mixed bag, and that makes sense. This intermarket analysis 12 grid should almost always be that way when we look at it, because it's covering such a wide variety of different assets. But what I would say is, what I typically look for are stronger trends or potential bounces. And right now there's not a whole lot to report. I would say that TLT, which is long bond, that was another thing we talked about in the question and answer session here a moment ago, and how the long bond is usually looked at a little bit more closely than the shorter term bonds in terms of how sectors are going to react to them. But anyway, the long bond here in the United States continues to go up, and so of course that means that interest rates continue to go down on the long end of the curve, and so that might benefit areas like utilities and real estate investment trusts, etc., a little bit more so than it would otherwise. So it'll be interesting to see what happens to those banks tomorrow, kind of seeing what's been going on with interest rates here recently, because remember, typically banks are going to struggle if interest rates are falling. We'll see if that kind of plays out tomorrow off of some of those earnings reports are not. The other trends that exist aren't overly robust. I mean, you can look at the muni bond trend, and that's okay, I guess. The dollar did bounce, so we talked about that a couple days ago as it was trying to stabilize around that moving average, but you can almost get the sense of a loss of momentum on that dollar down there in the lower left-hand corner. The commodities are still in a house of pain. As you can see, DBA continues to go lower and lower and lower. Part of that, of course, is response to some of the trade tariffs and the lack of Chinese buying of soybeans, etc. So it's very much news driven right now, but that's a pretty ugly looking trend that we're seeing on that particular chart. Crude oil basically finished flat on the day, but it did have a pretty wide range, and keep in mind it was down significantly yesterday, so maybe just a day of stabilization above a rising moving average in that particular case. Let's take a look now at our next chart of 12 grids here. This is going to be the foreign stock markets. And as you can see, it's a little bit brighter picture on this set of 12 grids. Most of these are bullish, with the two exceptions being China and Japan. In fact, that reminds me, speaking of China and of course all the trade tensions that we've been experiencing here recently, I did want to quickly show you guys that David's been busy writing a couple of blog posts here recently. So just this afternoon he wrote this one called Who's Winning the Trade War, based off of what's going on with China and the United States. And then yesterday he wrote, Are we headed towards an inverted yield curve and recession? So make sure you're getting in there and reading those outstanding resources from my colleague. If we click at this one right here that shows who's winning the trade war, and this, by the way, is just at marketscholars.com for those of you that are not familiar with our website yet. So just go to www.marketscholars.com and then click on the blog there if you wanted to read this particular one. Now notice that David's got his portfolio management with ETFs class coming up here tonight at 6 p.m. Eastern Time for those of you that are premium Market Scholars subscribers. But feel free to read out this this blog post here and some of the things that he's talking about regarding China and Korea versus some of the more developed markets out there. I see he's even using our nice little 12 grid, so it's always great to see that being used in some of our resources as well. All right, back on track here. As we look at this 12 grid, you will notice again, most of these are bullish postures. Some of them, the charts don't look all that great, so I'd be a little bit more cautious. But generally speaking, we're in a much better position from an international perspective now than we were about a month ago when things looked really ugly across the globe. So right now, at least we have a lot of stabilization as we look at these particular charts. Let's now take a look at the U.S. sector's 12 grid to get a sense of what's going on here in the United States. And we got a clean sweep here, ladies and gentlemen. All 12 charts green, meaning that we are bullish across the board. Yes, don't let a day like yesterday scare you out of your positions. This is a strong market for all intents and purposes. Could there be some things that are better? Of course. There's never a perfect market out there, but all things considered, this is a market that's still leaning towards the bulls, and so your portfolio should be positioned likewise. Now, as we look at these particular charts, notice the big comeback here in technology. That's where we're going to concentrate our trade application here in just a little bit. But we did have a new breakout from a 3-month perspective right there on XLK, which tracks the technology stocks within the S&P 500 itself. And of course, some of you saw the news here overnight where we had ticker symbol AVGO, so I could pull it up right here, AVGO, which is Broadcom. Let me pull that up. There we are. Notice this chart. Holy mackerel. This thing fell apart. Let me go over here to maximize sell. This is the candle after today. So they announced that they were buying CA, and apparently the market didn't like that at all. It kind of came out of left field. Remember, CA is not really even a semiconductor company, even though AVGO is. So they're kind of going down a different path as an organization than they had been considering when they were trying to buy Qualcomm earlier in the year. So kind of came out of left field, spooked investors a little bit. AVGO was down 13% today. And remember, this is one of the biggest semiconductors on planet Earth. Now, it did have a decent candle there, so keep that in the back of your mind. Interesting little hammer-looking candle there, but still a pretty ugly day for investors in that particular company, which makes the performance of SMH even more spectacular. SMH was up 1.2% today. Remember, AVGO is going to be one of the biggest components within SMH, which is an ETF that tracks the semiconductor industry. And so the fact that all the other semiconductors out there were doing as well as they were to make up for that huge beatdown in AVGO is rather impressive. And so it's not just the sector of technology doing well, it's many of the industries within that sector, of course, doing well as well. So I want to concentrate for our trade application on a software company here in just a moment. Before we do, let's look at the rest of these trends. I've been kind of pointing out discretionary here recently as well, particularly during this time period where it looked like we were catching some stability on that rising moving average. That's generally a good sign. So far, that has worked out very nicely. We're not quite to new 3-month highs, but we're knocking on the door, and I wouldn't be surprised if we get another big day tomorrow if we'd be up and through that area. And again, kind of likewise, there was a company LB, the old limited brands, that was within the retail space, of course, a discretionary stock that got beat up pretty badly today. And so it's nice to see that discretionary stocks bucked off, some of those concerns from that one individual retailer and continue to rally higher and higher and higher as well. As we look at a few of these other charts, telecom, I would say, looks pretty strong here from a charting perspective. Now, this is IYZ, so this does go a little bit beyond the S&P 500. And then lastly, real estate continues to be very resilient. Been very impressed with XLRE in recent months here. It's been a nice series of higher highs and higher lows for those real estate companies. So again, I think the great takeaway here as we look at these 12 green charts is this is a bullish market environment. And that's a positive thing for many of you that are concentrating on the long side of the market. So let me quickly take a peek at what was going on on a one-day basis within the sectors, and you can see here that the technology sector was up 1.58%. That was our biggest performer from a sector basis. The only sector that actually finished in the red today was XLP. That's consumer staples. Kind of bring that out right there. So that's your consumer staples right there. And it was just barely down, only by 0.13%. If we wanted to look at the bigger movers within those groups, let's start with technology. And you can see that we had a huge mover, and that was CA. So that was the company I mentioned a moment ago that is being bought out by Broadcom. But remember, CA is going to have much less of an impact on the S&P 500 than Broadcom would have, because S&P 500, of course, is a market cap weighted index. So it's good to see that, but it doesn't completely make up for the loss that would have been experienced from Broadcom. But we do have some other big names. IPG did real well, up 4%. Autodesk was up nearly 4%. Texas Instruments, that's a stock we own in some of my class portfolios, up 3.6%. Activision, wasn't that the stock that David just recently talked about? In fact, I think it might have been yesterday. Nice call, David. 3.5% to the upside. Red Hat was up 3.4%. So a lot of big movers within that technology space. I mean, wow, look at those results. So that leads us now to our trade application example for the day. Let's go back over here to the charts. I'm going to take a peek here at chart 4A right there, and let's go ahead and populate that with ticker symbol MSFT. Some of you might call it Mr. Softy. Others just know it as Microsoft, of course, one of the 5 largest companies in the United States. And one of the companies that largely has been forgotten about, quite frankly, because of the obsession that our country has over FANG right now. And of course, Microsoft was not fortunate enough to be part of that little acronym. So anyway, Microsoft has been a tremendous winner. In fact, I was noticing beforehand that this particular paper money account that I have here, we actually picked up 241 shares of Microsoft way back here on January 28th of 2015. And back then, the price was only $41.31. It's now worth 104 bucks. So it's been a really nice mover, yet not a lot of people talk about it. It's just been a consistent performer. If you want to look at how that chart looks here over just the last 5 years, I mean, that doesn't look like, a lumbering giant just plodding along. This is like a growth stock just taking off and rocketing to the moon here. So some really nice action out of Microsoft as it kind of redefined itself over recent years to be more than just a software company, to be equally as known as being a cloud services company. Now you'll notice we had a nice breakout on Microsoft here today. We closed at a new all-time high. Yes, it's a yearly high, but it's also an all-time high for this stock. And so we clearly got over the hump here. We had kind of a bit of a double top that was in play here from back here in early June to late June, right around, let's call it about 102.50, somewhere in there. So we even kind of pressed up against that 2 days ago, couldn't quite get through there, fell back yesterday, closed near the highs of the session yesterday, and then just really launched higher here today. Nice breakout there on Microsoft, and almost at an above average point. Notice the volume candle down here was bigger than some of these prior ones. It wasn't quite to these really aggressive levels up here, but it was still a better volume day than what we've been seeing recently. And remember, oftentimes the bigger volume days happen when a stock sells off. So it's a promising sign when you have a stock going up really big like this and then also having some of the bigger volume days that it's had in the last couple of weeks. So might give us some indication that some of the institutions want to get involved with this one as well. So what I thought we would do here today on Microsoft is a long call spread. And so that is a way to buy a call, which many of you are aware when you buy a call, you want the stock to continue to go up, but then sell another call against it to somewhat offset the costs of buying that first call. So it's something that you can practice that allows you to take advantage of further upside potential in a stock, but at the same time, not pay through the nose in order to do it. Now, of course, there are some downsides of that as well. Technically, you're selling away some of your upside potential. But in this particular case, it's Microsoft. We probably wouldn't expect this thing to go up like $20 per share in a short amount of time anyway. So it's not like we need that upside in most cases. So what we're going to do here today is just a simple bull call spread. It's a debit spread. So it's a little different than some of the trades that we've highlighted in these presentations in the past that are known as credit spreads. This one's a debit spread, so we're going to pay money out of our pocket for it. And usually the way that we set these up is we like to buy one that's in the money, buy one that's out of the money. So right now, the at the money strike, with this stock being just a little bit above 104, the at the money strike would be 105. So the way that we'll set this up is we'll buy the 100 strike here in the August contracts that are the monthly contracts with 36 days till expiration. And then we'll sell the 110s against it to basically, shave off about 70 cents off of the cost to help finance that to a degree. What we want for this to happen is for Microsoft to go from 104.19 where it closed today up to or through 110 on expiration day. So in order to place that trade, I'm just going to come over here to the 100 strike on the call side. I'm going to right click. I'm going to go to buy vertical right up here towards the top. Click on that. That loads it up. Now in this case, I do need to change the strike that we are selling, because remember, I don't want to sell the at the money strike. I want to sell the first one that's kind of out of the money a little bit more. So we're going to buy the 100 and we're going to sell the 110. And we're going to pay about $4.87 for that. Maybe a little bit expensive, but remember, it's right within that 1-for-1 zone where you're paying to enter into a possibility of a $10 spread, and you're paying just under $5 to access that particular spread. It's a little bit expensive because we're not quite to 104.87 on the price up here, but it's not egregious at the same time. I think it's adequate. And of course, most of you are aware Microsoft is a very liquid security as well, so that will help us get in and out if we so desire from an options perspective. So with that, go ahead and click confirm and send, review this one last time, and off she goes. All right, well, I want to thank you for joining me here tonight. Always a pleasure to go to work for you. As a reminder, David will be with you tomorrow, and I will be producing our new sector selector on Friday night. So for those of you that are premium members to Market Scholars, be looking at your emails this weekend. I'll be sending you a direct email with the link to that as well. So with that, have yourself a great rest of the night. Best of success with your trades and your investments. Goodbye for now.